Welcome to Trading Lounge and the US Indices for Tuesday, January 25th. We'll look at the Russell, NASDAQ and S&P in that order. And when markets are in fear, they tend to all mirror each other, and that's what we're seeing in this third wave, this minute third wave of wave C of wave 4. So we've got a wave 3, wave 4, A, B and C, and in the C wave we've got 1 and 2 and 3 and 4 and 5 here. So we haven't reached this wave 3 yet here. We're looking between 2 and 3. We're looking for 5 waves within that structure, and then wave 4 and then wave 5. Let's go into the tick chart and check on that. So 100 ticks. Bring in a bit more data. So from wave B up here, we've got 1, 2, 3, 4, 5 for 1 and 2. And then we're looking for, that's a minute degree, and then we're looking for 5 waves down to this wave 3 here. We can probably put that on the 1900, that would make sense. So between 2 and 3, we're looking for 5 waves. So we've got 1 and 2 here, and 1, 2, 3, 4, 5 here. So we're still into this green wave 4 here, and then down here again as well. So yeah, we need another move up here. Now wave 4s tend to move to the wave 4 of 1 lesser degree, or to the 38.2% retracement level, which is the lower end of this rectangle box. Once we've got that, then we'll see 5 waves to the downside and another 3 waves back up for wave 4. This one here of minute degree will be larger than this one. Technically they sort of should all line up here, but it's not really quite the case. So normally lower, so it may end up finding the 2000, the major trading level 2 here as the resistance. So large numbers are sticky numbers, and yeah, we're you know, the thing is to understand is that a trend, no matter what degree of structure it is, has a beginning, a middle and an end. And the beginnings are the 1s and 2s, and the middle is all the 3rds lining up, and the end of the trend is the 4th waves, the 4 and 5. So we're in the ending of the trend. Be very careful not to lose money in wave 4s. It's very typical for people to lose money in wave 4s. They see this here. What you see is not what you get next. You always get the opposite of what you're looking at. It's not the real world. I mean, it's real, it's happening, but it's not like buying a car. You see it, you buy it, and you know what you're getting. With the markets, you tend to get opposites. There's trends and corrections. So if you see a trend and you go to buy, well, then you're going to land up in a correction. If you buy a correction, well, then you're going to go into a trend. But people lose money in corrections, so they're scared of corrections. But corrections, you need to make them your friend, because that's where the next trend is engineered from. But in this case here, you know, yeah, this is pretty typical of what's happening in the stocks as well. If you see that, where this low will come in, I'm not sure. All we can do is count the waves to be sure. Let's cruise on to the NASDAQ, and the NASDAQ's the same as well. You can clearly see what's going on here. We've got the wave 3 up here, intermediate, and down into intermediate 4. We've got the A, the B, and we've got a beautiful 1, 2, 3, 4, 5 here, and wave 2 here. We're coming down to the 3rd wave. We're quite close for that to occur, nearly. We still need to come down here, and we still need to go back up, and we still need to come down. Now 13,000 is a major level, so in the Fibonacci sequence you got 1, 2, 3, 5, 8, 13, 21, and so on. So that's why that is there. These are 2 medium levels. 10,000 would be the next major level to the downside, and between 2 major levels is a medium level, so 1150. Unusual number, but 11,500, but she kicks in well. So let's cruise in and have a look at this. Look, I might just go straight to the tick chart on this, if that's okay. So we'll pick it up from wave 2 here. We need to understand wave 3, then 4, then 5. Alrighty, so we're going to go into 100 ticks. We're going to bring in some more data. Is 20 enough? Not quite. Let's get that reference point high up here. Yeah, still not there. Let's bring in some more. Okay, so we've got 1 and 2. Okay, that's just to get our bearings. And from that, from wave 2 all the way down to wave 3 here, we're looking for 5 waves in this minute wave 3 of degree structure. So we've got 1 and 2 here, and then we're going down for the third wave here, and then we're going into the fourth and the fifth, and between 2 and 3 here we're looking for 5 waves too. So 1, 2, 3, 4, 5, and between 4 and 5 we've got 1, 2, 3, 4, 5. So just fractals really. Now the thing here is that this little green wave 4 here typically retraces 38.2%, so we can put that in there as a guide stick so we can see that it comes into here. But this is the wave 4 of 1 lesser degree. When markets fall hard, sometimes they tend not to come back to the 38.2%, they can come back to the 50%, so just be very mindful of that. I'm putting it at the 38.2% because this little area here is the first where all that, it's the consolidation, it's where that volume was turned over, so that's likely where it will go. And we could probably look at it like this as an A wave here, 1, 2, 3, 4, 5, a B wave, and another 5 up through to here. How far that will go, I don't know. But like I said, the 14,500 is a nice number. It's the 38.2%. It's where the consolidation, the supply, meaning sellers, it would be sitting. So from that point, we would also be looking for 5 waves down here. Probably won't come too far below here. Once that happens there, then we're going to see this 14,000 play out as really the center of the pattern that will occur across this level here. Like I say, wave 4s tend to take your money, so be very careful in what you do here. If you are short and taking out of these bottoms, that's okay, and roughly put it back in over here. That's if you're a sort of a trend trader holding sort of overnight, whatever case may be, 1 or 2 days, whatever. If you're an intraday trader, then it doesn't matter. Every day's a new day and a new opportunity. So that's where we are, and this is exactly how stocks are looking as well. Coming to the S&P 500, spend a little bit more time here. However, we've got wave 4 here going up to wave 5 here of a larger wave 1 and 2. And we're looking at 1 of intermediate degree, 2, 3 here, and 4 here. The 38.2% retracement level comes in around the 4,100, but the market may be pulled to the 4,000. That's where we are. We're looking at 5 waves coming to the downside there, so let's cruise in, check on that. So one of the points to make here is that this high here was higher than this wave 3 here, but on the NASDAQ this high was lower than this one here, so there is really good reason to call this a B wave up here. Once again, from wave B to wave C we're looking for 5 waves, and we've got 1 and 2. We haven't reached wave 3 yet, and then there'll be wave 4 and 5. So we're still coming down at 38.2%. It's around the 4-1, but markets tend to gravitate to larger numbers, so we need to take that into consideration as well. And let's go in and try to understand from wave 2 to wave 3 here. There will be 5 waves within that structure. So okay, so I've done it on the 4-hour chart, that's okay. So from wave B down to wave C here, we're looking at minute 1 and 2 and 3 and 4 and 5 here. And between 2 and 3, we're looking at 1 and 2 here, and 1, 2, 3, 4, 5 down here for 3. So we could probably put this up. Wave 4 comes to the wave 4 of 1 lesser degree, so we can just take the top here. We'll refine that a little bit further. There's 38.2% retracement level there. That's the first flag we sort of stick in the ground. It's just a reference point. It's always better to count the structure, so like a little ABC up into this point, and those little consolidations in there would help with that. So in a nutshell, we're looking for wave 4, wave 5, wave 4, and wave 5, and then we can start building into the upside. Now what we'll be looking for here, of course, is that, you know, we could count 5 waves from wave 4 to wave 5 here and buy right on the low, and you know, we'll nail that down. But in terms of trading, we want safe trade, so we want to be looking for the first impulse wave to the upside. Once we've got that, it's good to have that, because then you can manage your risk better, because once you get 5 waves, there'll be an ABC pulling back, and this will be a 5-3-5 structure. We could go based on that 5 waves. We could buy at the end of that 5 waves, or we could just sort of look at a safe trade above the B wave there and keep the stop above here. Sometimes when you're buying at bottoms of the market, it's actually best to, if you're buying here, let's just say that that's the low here. If you buy in here somewhere and you get 5 waves in here, and then you wait for the little ABC pattern in here, don't put your stop under here, put it under here. Because when a trend is starting, the retracements tend to be more than 61.8%. They can come down to 80% and so on and so on. And if many people use CFDs as well, so those CFD providers, if you read their product disclosure statement, their PDS, you'll understand that they can move the price around. They'll be hunting your stops. So CFD providers are basically, bucket shops. Your loss is their profit. So you're really not only trading against the market, you're also trading against them as well. So one of the US option guys kicked them out. So anyway, onwards to the 1 hour chart. So we get a kind of a better view here of this now. So we're looking at some sort of ABC into this supply level here before we'll see it move down lower. Now this is going to be a rough journey when we hit into wave 4s and 5s. So what you see in these simple wave 2 corrections is not really what we get over here. It may be in this first one, but this one here will be more complicated. And also too, we're going into, in terms of the trading levels, we've got a medium level here, and these are minor levels 1, 2 and 3 and 5 and then 8. The Fibonacci sequences of price ratio. But when we come into, I call these 3 levels a group here, minor group 1. So the market tends to bounce around. So we've got a bit of a double whammy here. We've got group 1, and the market tends to bounce on these numbers quite strongly here. And then we've also got wave 4s. So wave 4s are normally complicated, and this group 1 won't help that situation. What it will do is hold it here quite firmly once it's locked in there, which is quite good for any short trades. You want to leave your stop out of the way, like we're doing with the US stocks that we're trading on the short side. We're keeping our stops well away from these wave 4s. And we'll just let them bounce around and do their thing. So let's just cruise into the tick chart on this 100 ticks. I don't think we need to go to 5 ticks or anything today. So more data, how much? Okay, that's plenty. So we've got our wave B up there. We had our 1, 2, 3, 4, 5 for 1 and 2, and then we're coming all the way down for blue wave 3, which is minute degree here. Different Elliott people use different things, so some people might use a degree smaller, some people will use a degree larger. It's always a little bit of an iffy thing, but it's not, I don't think it's really a big deal as such. I mean, it'd be nice if we could all do the same thing, but we don't, and it doesn't mean that I'm right as well here. There's good reasons that I can be wrong, but it's just a personal choice of how one sees things. So 1 and 2 here, and down to 3 here. So 1, 2, and all the way to the third of the third. The big wave here is, is pretty big, nice big third wave here for this wave 3. Then we're going back for wave 4 and down for wave 5. And we've got 1 and 2 in here. This could also be changed here as well. You could also have this wave 2 here, which I kind of prefer a little bit better. And then this would be into here for that. So that's probably a better bet, because you can, I mean, it looks like 3 waves there, but you can count 1 and 2 and 3 and 4 and 5 here. So that works quite well. But anyway, that's all history. Let's just focus over here. So it does appear that we got some sort of impulse wave here. So we can put that wave B over here now. And we're looking for this up here. If you want to go in there and count all of that, if you can count 5 waves here, then, but once again as well, if you're going to short this, well, that's 1 and 2 and 3 and 4, 5. So that's 1 and 2 here. That's 3 and 4, and that's probably looks a bit difficult to get 5 waves out of that point. But we could probably have a top in there. So even if there is a top in here, it's the end of the session. So you've got 3 waves here so far. So you don't want that. So if this is the top, or you're going to be doing it further up, you want to see that you've got actually 5 waves down here first. And then you don't need to go chasing it. It'll hit supply at some point or some number over here. And then you look for the ABC pattern to go back up again. And then you can short it at that point. So we don't know if that's going to turn into 5 waves yet, do we? But if you wait for that, then you've got that on your side, So either that needs to be moved up further. Just seeing if we can look at this as 1, 2, 3, 4, 5 there, but I mean it's 1, 2, 3, 4, 5 there. I mean this just looks like it's part of that leg. Anyway, it's starting to give overlap now, so that's not the case. That's going to be a, well, still could be 1 and 2 and 1 and 2, but doubtful it's overlapped this little first wave here, so it's probably not the case, so we can clean that up, but I want to remove this anyway. But that's the kind of thing that you'd be looking for a little bit further up to be sure on things, and we haven't reached our target yet. So, and also too, there's normally a sort of relationship between wave A and wave C in terms of size, and if wave C is going to be shorter because of some large number or some supply over here, then it's normally 61.8% the length of this one here, or 78.6. There's always some sort of relationship there. Alrighty, that's it. So I'll leave it all at that. Yeah, you get the drift of things. Do not lose money in wave 4s, okay? And what we'll be doing is looking for the low in the stock market. That's why I do the US stocks every day, because I know that they create the indices to a point. The futures market can push things around a bit, but generally speaking, the pattern will come from there. So once we nail the low in there, then we'll be looking for the low here, and we should be able to look for our long trades to the upside. And that should be quite a nice little journey when we think about it. If we can just go and have a quick look on the daily chart for a moment. So we're looking at the 38.2% retracement level at 4,100, and then we'll be looking for, once all that's said and done, we'll be looking for 5 waves up into the 5,000 area, where we'll have something of this nature here. So a nice run. So probably really good to trade your ETFs up into that, so you can don't have to compete with leverage. And certainly if you're a CFD trader, go over to the leverage, because the overnight financing in CFDs is horrendous. It's compounding interest, which they calculate every day. Yeah, so it can build up to a lot, and they don't really display it either, so it's hard to find it on the site. So they're there every day, just clipping your ticket, you know. So it's a huge cost. So, alrighty, enough whinging. My mum's English, dad's Australian, so I'm allowed to whinge a little bit. Alrighty, adios.